Hey, good morning, guys. Louie here. And we are going to talk a little bit about the nature of reserve currencies and why it is that fiat currency always returns to be backed by something of hard value, primarily gold and silver. Pardon the grass here. We're having trouble with gophers and big dumb dogs. So, last time we talked about the Coinage Act of 1792. That was Hamilton's masterpiece, and it wasn't completely supported by the states of the Union. It removed much of the power from the states to create currency. They had overprinted the currency during the war and after the war, and there was no confidence in that currency anymore. All right, the concept of specie, all right, specie currency is currency that is backed 100% by gold or silver, all right, and both in the early United States. And the Coinage Act of 1792 made sure that the Bank of the United States was given the ultimate power to create or not create currency. So the United States was off on a strong footing on the system that Hamilton had designed from 1792 forward into the early 1800s. There was massive expansion of the United States, agricultural expansion, industrial expansion, the building of roads, etc. And that was the currency that was utilized during that period was carefully and conservatively managed by the Federalists. All right, Jefferson was a Democratic Republican, and he was opposed to the federal powers. He thought they could get out of control very easily. And he actually favored state powers over federal powers. But I don't think he had a solution for states overstepping their reserve, overstepping their currency moves, and relying on the citizens to absorb the losses. So, like I said, there was great stability between 1792 and the early 1800s. But slowly but surely, the Federalists lost power, kind of culminating in 1804 when Hamilton was killed in a duel at the age of 40, I believe. Thomas Jefferson was able to reestablish power and basically disband, after about 20 years, disband the Bank of the United States, which had very sensible reserve requirements. And during that period, also, the bimetallism mandated by the Coinage Act was 15 to 1. Why was it 15 to 1, silver to gold? Well, that's what the current exchange ratio in the world was. And the world was dominated by the Spanish dollar, the milled dollar, which the US dollar was patterned after. In fact, the Spanish dollar circulated in huge volumes for another 50 years in the United States. But 15 to 1 was written into the Coinage Act, and the issue of reserve, what is the reserves that are required, that was based on the opinion of whoever was minting or creating the currency. But like I said, it had been at around a 30% reserve ratio for about 20 years. But then Jefferson came to power, and the timing was poor on this because he eliminated the Bank of the United States, and he reestablished state chartered banks. All right, right around this time, there was great expansion in road building, levee building, and the need for currency was dramatic, and for debt was dramatic. And the states had a little bit of a party and wound up lending much, much more currency than they had gold and silver to back it up. I believe the bullion in the vaults of the Bank of the United States was distributed to the state chartered banks, but by the time they got done, I don't think their ratios were any more than 10%. So, in other words, if they had $10 outstanding in currency, only $1 of silver and gold at the prescribed weights per the Coinage Act was in the vault. We had the War of 1812 that exacerbated things and required more and more and more currency. And well, luckily we won. We pushed the British off in the War of 1812, and but we were left with a massive amount of debt and this state system of banking. What happened? All right, can you guess what happened next? Where when the war was over and people realized that their deposits in these state chartered banks and the currency issued by these state chartered banks were only good, only about 10% of it was backed by gold and silver, run on the bank. All right, that is that is what always happens when reserve requirements are dropped below sensible levels. The moves that the states made to create currency were unchecked. They were unchecked by any federal institution, and ultimately led to the destruction of the banking system at that time. Why? Because gold and silver were the only metals that were trusted back then, and all the debt, all the currency that was being issued was theoretically backed by gold and silver. However, in reality, it wasn't in the vaults. But another example of what happens when there are not sound reserves to back the currency that has been floated out in our world. Yeah, I'm afraid, as it turns out, the least safe place you could have your money in the 19th century, and the 20th for that matter, for the early part of the 20th century, was in a bank, because they were highly unreliable to manage those reserve requirements. This particular story ends or pauses when the Second Bank of the United States is created and backs up the currency of the state banks, but only to the extent that that currency is 100% redeemable in specie, forcing the state banks to reinstate specie conversion for those that were strong enough to sustain that. And the system is calmed back down, but a lot of people lost money on the state notes that were trading at a discount during that time. Why? The reserve requirements in silver and gold were not prudently managed. All right, enough of that history lesson, and now just a follow-up on my GSR trade. As you know, I am valuing silver not in fiat, although it's about $23 plus or minus per the COMEX, but in gold. The true value of your silver is measured in how much gold it will buy. Well, presently, it will take about 76 or 77 ounces of silver to buy an ounce of gold, and that is why I have been converting my gold to silver. I've done about 1 3/4 ounces so far, and the last trade I did with the LCS, I achieved, premiums included, achieved a 72-to-1 conversion of my gold to silver. And I have also traded out some Libertads where the premiums I received on those were higher than spot. But I'm not gonna go into that. What kind of gold you buy is also important. And if you come into it with something that is appreciating, like the Libertads were, then when you go to trade it out, even though gold prices are depressed, you can kind of save yourself and not lose too much money on that sale, which is what I did. I'm using that money to buy silver. And silver is its value right now is low compared to gold. All right, and again, that's why I'm trading out. At some point, when the GSR reverses back down into the 60s, I will do the opposite, or if it goes into the 50s, even better. The follow-up I'm making on these little dimes, apparently these little dimes were quite special in that they are Reagan dimes. There was, and they're not legal currency, they are just a proof round. But apparently there was a movement some years ago to put Reagan on the dime, but they could not get Congress to eliminate FDR. And they created, I don't know how many of these were created, but they're really quite valuable. And in this trade that I got these for $1 over spot, it turns out that these little dimes are selling for $100 an ounce on eBay. Check it out. So a one tenth dime is selling for 10 bucks. So I paid $1 over spot, but actually these are trading at about $75 over spot. Amazing, isn't it? Anyway, I'm going to sell those. I don't really want them, but they are quite beautiful. And what a surprise to get a $100 an ounce trade out of my silver. Okay, well, we can keep looking at those for a minute. I think it is a great weekend to shop. I think the premiums have come way down. All right, even on the Eagles, you still might pay a $6, $7 premium on an Eagle. You may want to avoid them. You may not. I'd have no problem buying Eagles here. Even the Type 2, which are, not much in demand. I saw some of those trading in selling after my credit card rebate in the 28s. And it ought to be $1 lower today, right? Because spot was pummeled again. I think what's happening, just to give you my view on the market, of course, I never predicted $23, $22 silver. I thought 24 would be the floor. To give away the entire move, to call the entire move a head fake, I'm not in that camp. I'm sorry, I'm not in that camp. I can't see, copper quadrupling and all other commodities going through the roof. Oil going from, negative $37 to $70. And silver remaining valued at what it was valued at in 2016 or something. I'm just not in that camp. You may think it's going lower. Sometimes you can judge where we're at by the tone and the nature of the YouTube videos. When you hear desperation in the community, when you hear anger in the community, when you hear people accusing other people of misleading people in the new stackers, that signifies a bottom, guys. That is not, it was all good times, 4 months ago, right? But anyway, I'm seeing a lot of pessimism, which is telling me we're near a bottom. Don't listen to me. It's not financial advice, and I was, wrong about it going under 24. But here we are at 23 and pushing to 22 possibly. But I do think there is opportunity in silver. Definitely in the low 20s. And I think it will. Oh, there's a little buffalo. So that little buffalo is not worth $100 an ounce. But fractional is always worth more. Any kind of fractional is always worth more than an ounce of silver. Tremendous premiums actually on fractional. So anytime you can trade whole ounces for fractional, if you can trust the silver, then you should do that because you'll be making out better. A lot of people like this fractional silver. Like I said, we're pushing back to 22. I think there is an opportunity here in the GSR at 76, 77. Also an opportunity to get your gold. The end game is gold. I agree with that. But you want to be circumspect on how you achieve that. Right now, I think silver is cheap. I have no problem buying more, just be careful out there. If you're averaging, then you probably probably doing okay. You may have some $37 Eagles in your stack, like I do. Hopefully, you don't have any $45 Eagles. I don't think anybody ever told you to do that. There is. There's a lot of buying going on. All right, that's what my LCS said, 10-to-1 buyers. I'm sure some people that bought in high may be dumping at this point. But why is this predictable? All right, well, I think what happened on Friday is the metals community is front running the Jackson Hole meeting and the Federal Reserve discussion. There is a lot of talk about tightening, right? There are a lot of jaw boning about tightening, which is always negative for metals. And will they tighten? I don't know. I'll have to see it happen to believe it. But since they may be talking up the dollar, and and so forth, that's usually negative on metals. I think people that wanted to get out got out on Friday in anticipation of what could happen next week. I'm seeing people predict further drop next week. But you know what? If you wait till the event, often, it's a buy the rumor, sell the news kind of a thing, and silver could wind up going back up. In any event, right now, the ratios indicate that silver is cheap. The fiat price indicates that silver is cheap, and you can't complain if you're one of the people that was begging for lower spot price and lower premiums. Now you've got it. Now you've got it. So you can't complain that the bottom fell out. You got what you wished for. Therefore, go forth and frolic in the low premiums and the low spot price. Not everything is a low premium, but as I predicted, all of the weird stuff is going on sale. The kilos are going on sale. The constitutional is going on sale. The foreign, Turkish bars are going on sale. The Italian bars are going on sale. Hell, even the Germania mint bars, which I bought a couple of at much higher prices, are going on sale. Question about those, and that is why is the 100 gram so damn expensive when everything else, the kilo, half kilo, quarter kilo, etc., are so reasonable? Why is that 100 grams so expensive? I don't quite understand that. I want to get the full set, but I'm not going to pay $30 an ounce for bullion in 100 gram format. But anyway, all that stuff is going back on sale. 100-ounce bars. I imagine you'll be able to pick up a 100-ounce bar for about $2,400 here very, very soon. And just keep your eye out. Silver is silver, all right? But it goes in phases, and when things are in short demand, like the U.S. Mint Eagles, the premiums go up. When things are in low demand, like Turkish silver right now, the premiums are going to go down. And that's just the way of it. It is very cyclical, and I think we'd be wise to remember that. All right, guys, what are you out there buying today? Have you given up on silver? I guess you have every right to if that's what you want, but my spidey senses are telling me that now's about the time that we put in a bottom. Talk to you later. Have a great weekend.